Well, howdy to the flippin' flapjacking crew. Welcome into this video here, which is a big one. There's so much going on in the market. This crash, this correction, whatever you want to call it, what's going on in the stock market right now. There's so much coming out that people are seeing, so much that people aren't seeing, and there's so much new news all the time coming out and things like that. And in this video, basically what I want to do is I want to break down kind of what I see going on out there. And there's a lot that I see going on out there, and I want to break this down as simple as possible so you guys can kind of understand what's happening in the market and what to kind of stay away from in this sort of market we're in right now and what to kind of go after. Okay, so first off, where I actually want to start today's video is looking at monthly market returns. All right, and basically what this shows you is for January, it's usually a coin flip on if we're up or down. There's been, since 2000, all the way through last year, there's been 11 up years, there's been 11 down years. The average return for the month of January is negative 0.36%, okay? Some of the years have been great, 2019 specifically, but keep in mind, we came off a horrible market in December of 2018. Market was tanking, and then we got saved basically right around December 26. Market started to go up again and had a great January. Like a 9% move in January was off the charts, right? And we've also had some pretty darn bad Januaries. 2009 down 8.5%. This is definitely going to be up there with the worst Januaries ever, if not the worst January ever for the stock market. We're going to be right there, basically. If you haven't seen the NASDAQ is now down 13.44% year to date. It has just been a disaster zone nonetheless. And so this is one of those years you're looking at and you're saying, okay. Now, next question I want to answer is what happens in February? What happens in March? What happens in April? Like, are there some good months likely coming? Well, let's go ahead and take a look, okay? So, February, also usually pretty much a coin flip month on average. 12 up years, 10 down years, average return of negative 0.57% since 2000, all right? So not that encouraging for February. However, when we go to March, we see a flip happening. 13 up years, 9 down years, average return 0.85%, pretty darn good. April, oh my gosh, you want to talk about the best month for stocks? It's April, okay? If we go at least since the year 2000, which is what matters, because I really want to look at, I don't care about what was going on in the stock market 60, 70, 80 years ago. Their financial system was completely different at that time. Everything was completely different at that time, right? I care about more modern history, the last 20, 25 years. So April, 17 up years, only 5 down years. That's extraordinary. Average return of 2.42%. Look at some of these moves in some of these years, right? 2020, 16.59%. Oh my gosh, okay, that's just epic. And when it comes to the down moves, they tend to be pretty strong if you do have a down April, but 17 years of up years, guys. That's, nothing short of extraordinary. Like usually you're going to expect a very, very good April in the stock market. I think this is just one of many factors. Well, there's a lot of folks that I've heard a lot of these people in the stock market say, hey man, I'm going to go big in the market or come back in the market if they had sold out of stocks or whatever, March, April. And I think that's one of the big factors because people look at recent history, the last 20 plus years, and most of the time, you're up, okay? It's very, very rare. I mean, we haven't had it. Look at that. We haven't had a down April since 2012. And before that, you had to go to 2005 for a down April, guys. That's nothing short of extraordinary. So, by the way, if you're looking to join the best program out there in terms of like a course in the Discord chat, the smartest group of investors I've ever been around, check out the pinned comment down there to apply to join us in there. Learn how to invest in any market, all right? If we go ahead and look at May, most of the time the market is good. 15 up years, only 7 down years. Now do keep in mind the average return is only 0.24%. That's because we have had some bad Mays in recent years. So 2010 down 8.34%. 2012 down 0.62%, and 2019 down 0.68% essentially, or 6.8%. So big downward moves there for the market. And, so this is just something to keep in mind that when you look at April, when you look at May, most of the years were up, and I think that's one of many factors why folks are looking at I hear all this talk about, hey, March, April, not buying anything till March, April. I think this is one of the big factors. Now, if you want to know the worst month, generally speaking, for stocks, it's September. The average return for September since 2000 is down 1.28%. Yeah, September's just usually, it's a coin flip if it's going to go up, but usually it goes down. Usually the percentage is pretty darn negative. Let's just put it that way, okay? So that's something worth addressing here at the top. But look at the market here today, right? NASDAQ was flirting with 14,000, and then just fell off a cliff. And it was interesting because once the Fed statement came out, it was seen as a positive initially. I don't know if you guys heard. You probably have. Okay, I think everybody's been tracking that. The Fed, Jay Powell came out and talked and answered a ton of questions for, he was probably on there for an hour or so, and answered a ton of questions in general. And when the Fed statement came out, the market was solid. And once he started talking, the market just started moving down and moving down. It wasn't really anything earth-shaking, like, oh my gosh, I can't believe Jay Powell said that. Oh, it wasn't anything earth-shaking. It's just we're in that sort of market where volatility reigns supreme. And when you see stock prices, we fell off a cliff. Once essentially Powell started talking, man, we literally fell off a cliff on everything. Something I like about Hungry Bowl is we have the charts, you can see the one-day charts like right in between the stock price on your watch list. And look at Purple. It fell off a cliff. Look at GoodRx, fell off a cliff. That's not even like some dangerous business model. It's like, oh my gosh, this is such a scary stock. It's not, it's GoodRx. Like if you know about the company, like it's pretty darn impressive. Stitch Fix fell off a cliff. The Hood, oh my gosh, look at the Hood today. Literally just fell off a cliff, ended up finishing down 5%. And it was actually a respectable day for the Hood up until that. BABA obviously fell off a cliff, but BABA pretty much falls off a cliff every day, kind of like the Hood does, okay? If we look at SDC, fell off a cliff. Fubo fell off a cliff. Celsius fell off a cliff. Lemonade fell off a cliff. Square fell off a cliff. Every single growth-related stock you can find out there, literally, once Powell started talking, woo, man, did they fall off. Every single one. So a lot of these stocks had nice gains for the day. They really did. They were green. People are feeling good. Accounts were up left and right. People were excited. Myself, I think at the peak today, I was probably up at least $250,000, if not 300,000 plus. And then I think I barely eked out a gain today. You know what I mean? Like just literally everything pretty much fell off a cliff. There's some stocks that finished green, but compared to how green things were prior to Powell coming out and talking, oh man, okay? So basically the market, what happened here today, if you want to know, the market was expecting some good news from Powell, and everybody bought right in the morning, and it sent the market up, and stocks were looking great, and then everything came crashing down essentially. Okay, that's what happened here today. Look at Lemonade stock here today. Just off a cliff. Voyager off a cliff. Teladoc off a cliff. Teladoc, it's still about $5 above 52-week low, but yeah, don't be surprised if that baby hits back down there. Look at Funko. Fell off a cliff. Corsair off a cliff. Oatly off a cliff. And Nordstrom all off cliffs here today. Extraordinary moves down once Powell started talking. Maxar Technology, same thing. Palantir, same thing. Palantir, look at that. $12.75 Palantir now. I got to get in Palantir. That's all I got to say. Facebook off a cliff. Beyond Meat off a cliff. Dropbox off a cliff there. The Chef was having a great day. It really was. It was up, I think, 8% at the highs. And that was one of the reasons that I was up, many, many hundreds of thousands at one point today. And then Powell came out, started talking, and off a cliff. Every single thing. And so what you see happening on a day like today is people bought very, very heavily in the early morning trading. People were buying call options. People were buying stocks. People were loading the boat, hoping for some good news from Powell, or like he was going to change course or something like that. And it just didn't happen. They stayed the course. They said everything that was expected to say, and everything just tanked through the floor. And that's why it is so dangerous to gamble. It is so dangerous to gamble on something happening short term. Like, oh yeah, maybe Powell's going to lay off a little bit and not be consistent with what he says. And so, maybe stocks will pump all day and into tomorrow and into the next week. And it's like, that's such a gambling decision. That is such a gambling decision at the end of the day. It's not an investment decision. An investment decision says, I love this stock. I'm going to buy this stock for the next 5 years. I love where this company's going and their revenues and where their net income's going and the trends that this company has and all those sorts of things. That's investing. When you start doing things like, I'm going to buy call options that expire next month because the market might pump, or this stock might pump. Oh, let me load up on some stuff. That's straight up gambling. There's no debating that, okay? That's straight up gambling. It's not even an estimated guess. It's gambling, okay? And it's just so frustrating because I see the activity. Brian sent me some interesting stuff that he looks at. He looks at much more technical related things. And you can see the trades going through for some of these options in this early morning today that were just boom, 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 everybody loading up. And a lot of these option contracts are now already down 20, 30, 40% because they're thinly traded and people were loading up on them. And so literally in a matter of less than 24 hours. A lot of these option contracts are now down 10, 20, 30+% in a matter of hours. And it's like you say, well, it could have gone up. Oh man, sure, it could have gone up and they could have been up 30% or 40%, right? That didn't happen. And that's why you don't gamble, okay? And it's straight up gambling what a lot of these individuals are doing in this market right now. I've known some people very, very close to me that are what I would call compulsive gamblers, okay? And they do what's called loss chasing. Loss chasing describes a tendency of a gambler to amplify their betting in an effort to recoup prior losses. It is widely regarded as basically a defining feature of disordered gambling, a hallmark to a transition from recreational to disordered gambling. And I see people basically doing this, and these folks have treated the stock market this entire time for the last 2 years as basically a gambling pool to just gamble on stocks and not making really bets on companies over the next 3, 5, 10 years, 7 years, whatever, right? They're making bets on stocks for the next week, the next month, maybe the next 3 months. Their stock might pump. You hear it in their voice. Oh, I think stocks are going to pump. Powell's going to do this, that. And it's like, this is... And they don't even and the problem with this is, and like I said, I've known some people very, very close to me that I've seen go through this cycle, essentially. The problem is when they're in it, they don't realize it. They don't realize it. They try to chase gains after gains. I went through this cycle a little bit in 2015, and I was in stocks. I was out of stocks. I was in stocks. I was out of stocks. Next thing you know, I was playing earnings trades, and I put myself into a hot mess, and I would lose money, and then I would try to recoup my losses, and I'm like, I'm going to go even bigger in this earnings trade. This one's going to go right. Sometimes they would go right. Most of the time, they didn't go right, and I ended up losing more and more and more. And it got to the point where I had to fully rethink everything. I'm like, what path did I just go down? And you don't even know about it when you're in it. You don't know about it when you're in it, essentially. You have to take a full step back and just be like, okay, where am I at? And then you start slowly kind of getting yourself back together. And it doesn't happen overnight either. It takes a while to get yourself back into the right frame of mind. And it doesn't even necessarily make me mad to see it. It makes me sad to see it because I see these individuals going through this, and it's like it's honestly sad to see. Okay, why do gamblers continue to gamble after they have lost? It's not any easier for gambling addicts to just stop than it is for an alcoholic or a drug addict to stop using their substance of choice. Gamblers don't only get a rush of adrenaline when they are winning, but also when they are losing. The uncertainty of gambling is what motivates players to keep gambling. A compulsive gambler will believe that they are just one bet away from winning the jackpot, and many believe that gambling is about skill to an extent. In most cases, when an addicted gambler loses, they don't stop there. They think they are so close to winning that if they just try once more, surely they'll win this time. This is a very dangerous mindset to have. They often feel a sense of panic at the moment they have lost and are determined to gain it back. This is referred to as chasing losses, okay? And the thing is, when it comes to this isn't just something that happens to people in a casino or sports bettors or people that bet on horses or anything like that, right? And most people that do that sort of activity do it responsibly. But you have a certain segment, okay? And these are usually very, very I would call them very, very confident individuals, and a lot of times they love the competition, right? I love the competition of the stock market. But they go down this path where they might have lost a ton of money. And they start to panic. And what do? They all of a sudden sell stocks. And then all of a sudden they make this move. And all of a sudden they're jumping in. I'm doing this now. I'm doing this. And they're looking everywhere, trying to get the money back they lost, okay? And they think they can somehow win this game or something like that from a short-term perspective. And they're trying to chase the riches rather than just taking a step back and being like, what the hell am I doing? What am I doing here? I'm not even investing anymore. I'm in and out of stocks. I'm buying these calls. I'm also doing this. I'm doing that. And they get so far all over the place. It's really, really sad to see. And it happens in the stock market, and people don't realize it. You know, there's a huge difference between investing in companies and gambling in companies or gambling in stocks, right? When you're gambling in stocks, you're in, you're out, you're playing it from the perspective of I'm trying to make money tomorrow. I'm trying to get rich tomorrow. I'm trying to get richer tomorrow. And that's just not the name of the game, guys. And it's unfortunate to see this happen. I think it's been going on for, a good amount of while, but I think it's just reached the levels that it's getting much, much worse. And the worst part is you get a win, right? If you're in this sort of cycle, all of a sudden you get a win, so you get that confirmation that like, oh, this is working, right? All of a sudden you're playing all these options, and all of a sudden you get an option to hit, and you're like, oh man, oh boy, I just made 200% on this option. I just made 80% on this option. Here we go, baby. Here we go. Okay. And it's unfortunate for me to see, because I see a lot of people going down that path, and it's nothing short of unfortunate. That's all I can say about that. And the only way you can break out of a cycle like that is to basically, unfortunately, you have to kind of cash out of everything, go to the sideline for a significant amount of time, take some time off, and really be real with yourself. But as somebody that has known a lot of compulsive gamblers that have been very, very close to me, you can't talk reason with them. You cannot talk reason with them. They are hell-bent on their mission. If you ever try to get somebody that's really gambling a lot out of a casino or something like that, good luck. Good luck, okay? That's all I got to say to you. Good luck. They are so convinced, oh, I just need, to put another 20 in, and this baby's going to hit. And they think they're right. You can't talk reason with them. And it sucks. That's all I'll say about that. It sucks. So anyways, guys, keep your heads out there. Ask yourself, are you gambling or are you investing? That's the biggest question at the end of the day, and stay away from that, because in this sort of market, it leads to a lot of gamblers that lose a lot of money, and those folks get habits that are really, really hard to break. Like I said, you have to take a step back for sometimes at least a few weeks, if not several months. Take a step back and get back on the right track, okay? Anyways, guys, much love as always. I appreciate you guys joining me for a video like this, and have a great day.